for CALMAT Summer 2012 Financial Accounting Final Project. My topic, depreciation under the GAAP rule. My topic will cover the following: GAAP rule, depreciation elements, depreciation methods, depreciation recordings, financial accounting considerations, and summary and questions. In business, depreciation refers to the wear and tear of the fixed assets used in operations. And in accounting, depreciation is the expenses charged representing the loss in the value of an asset. Okay, so the accounting rule under the GAAP. Okay, company can and required to capitalize a fixed asset purchased and then recover the assets cost through periodical depreciation charge, rather than just expensing the total purchase in the immediate period. There are three major elements in the depreciation. The first one is the original purchase cost. This will including the freight charge, the installations, and everything that associates with the asset in the original purchase and the setup. Second one is the estimated salvage value, meaning that after the depreciation period, what will be the value, the market value of the asset. The third one is intended economic life of asset in services. Depreciation methods. According to the accounting rule by the US GAAP, there are three different methods, and the methods are varied, and company can choose based on one, the asset type, two, the management decisions. The management decisions is really all about the capital investment and the replacement. The three commonly used depreciation methods are: number one, activity-based method; number two, straight line method; number three, accelerated depreciation method. Okay, the first method is activity-based method. This is really a function of asset usage and production, meaning that you pay as you go, as you use. The second one is the straight line method. It's a function of time of an asset in services. You don't know, or you don't predict how long, how much the usage will be. Meaning that each period, beginning of the year, end of the year, first year, second year, you just use a straight line, just divided it all through the complete period of the services. It's called straight line. The third one is accelerated depreciation method. Under this method, you charge more depreciation in the early period for the asset, because the early period will require higher repair costs, maintenance costs than the later period, because of the greater loss in asset value earlier. Just like you buy new equipment, you will depreciate the first few years much faster than later year. Like you just buy a new car, obviously the first year will depreciate a lot more. Some of the machinery that used by a company could be the same way. So this is called the accelerated depreciation method. Okay, let's go into depreciation recording. According to the US GAAP rules, depreciation charge is reported in both, one, in the income statement, and also number two, in the balance sheet. Company record depreciation charge in each accounting period as a non-cash expenses against total revenue to arrive at the net income. So your revenue need to subtract all those expenses and become your final net income. And in the meantime, company also record depreciation charge in the account of accumulated depreciation. The journal entry account opposite to the account of depreciation expenses. And the account of accumulated depreciation is a negative account to the related asset account on the balance sheet and represent the total loss of the value for the asset as a result of depreciation taken from current and all prior period. So your balance sheet will show you have a decrease in your asset. So this decrease obviously is from the depreciation recording. In summary, depreciation, let's look at it in the financial accounting consideration. So it's really all about the business operation efficiencies, your profit and loss, your cost of goods sold, and also tax consequences. So the management really need to make the right decisions to determine how you will do the depreciations that will reflect in your business operation, your balance sheet. So it's important that a company and the operation team has to take the full advantage of the different appreciation method under the GAAP, so that they can maximize their operations and turn into the profit of the company and for the shareholder. In conclusion, just a few questions for the Professor Tang. Okay, so for any specific asset, can you change your depreciation methods? Say starting out you use straight line, and later on you would like to use the activity base, because for example in the early on you anticipate you might not have that much activity, so you kind of taking the advantage or try and use the method of where and what can give you the maximum depreciation. So if this is not allowed to switch the method, then the then company or operation can just sell the asset and then buy the sale asset again, so everything get reset. Or the company with different subsidiaries, they can just easily transfer buy and sell more different entities to really make sure you are within the rule and take the maximum benefit of the depreciation rules. Thank you, and thanks for the great class, Professor Tang.